Is how demand is performing and how domestic capacity could saturate that demand. I think India is a very good example of a lot of refining capacity being planned, particularly 2024, 25, you still have new refineries coming in, and then suddenly it stops. There's a pipeline of projected things to happen, but nothing of specificity coming into the picture. We know that India will grow. India will be, by 2026, India is incrementally the largest source of demand in the world. Can domestic refining capacity saturate that? I mean, it will. Can the domestic refining capacity grow at the pace of the domestic demand? That's a good question. In 2025, it will. 26, most probably, yes. 27, 28, that's a good question. And I think these strategies where you sort of look into what's being built and how you can play around those assets would be key. Europe, again, is in a completely opposing field. Europe is shutting down 3 refineries next year, basically starting in Q1 2025. Could any of the regional players capitalize on that? Absolutely yes. So for instance, would we expect higher Middle Eastern diesel flows into Europe? Absolutely. I mean, all of the 3 refineries, Grangemouth, or the German refineries that are shutting down, are middle distillate focused. That's an opportunity that could be effectively capitalized on. And I think you just need to look at the specific assets across the universe. You need to understand who's investing into future growth and how that could be met. And ultimately, if you see the discrepancy between the investments in Asia, say, and Europe, which is huge, ultimately that's the key opportunity for everyone to exploit.
Great. And Kieran, I think you're based in Bahrain for Vityol. How do you see the growth in the global south and the opportunities there are for traders versus, say, the more established markets in Europe?
Yes, good morning. I think, as we touched upon, and I sat in a very interesting talk for Narendra yesterday about the growth in India, but also, we've focused a lot on the growth in Africa. And Pan-Africa, we expect GDP growth to break 4% across the continent next year. So whilst there's a huge amount of cautionary tales about the north, and China, of course, dominates, ourselves and others in the sort of trading fraternity are looking at Africa. We're investing in Africa. I think, in Q2 this year, we've through our affiliate Vivo on downstream, we've acquired Engine in South Africa, and we see a similar process going on for the Shell assets in South Africa as well. And that population growth that the previous panel spoke about, the growth in the middle class there, all leads to a little bit more focus from the trading side on that. And of course, India, where we're really, India is becoming the new China in terms of the outlook, and whilst China struggles a little bit at the moment with their economy, all eyes are turning towards India and the growth story there.
Well, that's a good segue into India. And Narendra, I mean, tell us a bit from your perspective. I mean, you mentioned that India's growing its refining capacity quite significantly over the next couple of years, but there could be it could taper off after 2 or 3 years. But how do you see the opportunity in India for the global trading community?
Well, you see, India is now being recognized globally as a kind of refining power, if not superpower. And it plays a very important role in terms of India's hard currency earnings and its place in global economics. But at the same time, we know that India can't take for granted. So there are plans to set up 2 more mega refineries, and there are suggestions that we need actually 2 more, 2 plus 2. So 2 are already kind of under work, and there is a kind of proposal now. Of course, we have got some people who say, we don't need it, we are entering into the renewable energy age, and therefore we don't need more refineries. But I think if we take a practical view and pragmatic view, we have no alternative. Two reasons for that. Number one, to maintain India's position as a major export hub for products. Number three is, of course, maybe our own domestic demand. Because the way I look at it, we are consuming today roughly 5.5 million barrels of oil per day. In my own back of the envelope calculation is that probably we're going to touch maybe 6.5 very soon if we sustain at 7%. But if we want to grow at 9%, probably we'll be consuming something like 7.5 million barrels a day. And if you look at the kind of ambition on the part of the people across the country, they want to grow at 9%. So, and at the same time, we know we are doing very well in terms of renewable energy, but that is not exactly the answer. We need a mix of both, renewables as well as traditional energy, including coal. So given that reality, I think, we will have no option but to go for 2+2, if not 2+1, and that should help the situation. At the same time, there are proposals, at the moment only proposals that Indian companies should go and invest for one mega refinery on the east coast in Africa. So that's also under discussion, which may be, if not fully, at least 51% owned by Indian interests. So there are different landscapes being talked about, but one thing is very clear, given the fact that Indian refiners, they play a very important role. India's in exports and especially the export basket. Therefore, they will get all the support they need from the federal government as well as from the state government. There are challenges like environmental lobby, renewable energy kind of push and all that. But I think when it comes to India's ambition and given the ground reality, India probably in 5 to 7 years from now, we're going to see 4 more LNG import terminals and 2 more mega refineries, and hopefully maybe 2+2. Thank you.
Amazing, yeah. Well, before we jump into the second question, I thought we'd just, if we could just put the first survey to get the audience involved here a bit. And really, this is more about the context behind the trading environment, and particularly the increased Russian crude flows to Asia. The question being, has this redrawn the oil trading map? So A would be agree, it's now a permanent reality, and B, disagree, it will all return to as it was after the end of the war in Ukraine. So be interested to hear your views on that. A, agree, it's a permanent reality, and B, disagree, it'll all go back to how it was before. And I think we've got an overwhelming majority of 75% A. That's very interesting. So it's a permanent reality. I mean, perhaps it'd be interesting actually just to get your views on that, the panel. And again, maybe kick off with you, Viktor. I mean, a permanent reality, because it was all cobbled together very quickly in terms of the way the market reshaped and partitioned Russian sales into new markets. But, I mean, how do you, if it is indeed a permanent reality, I mean, what are the implications for you?
Well, I voted A as well, so I think it's a permanent reality. There's several factors to it. First of all, let's assume that there's a presidential election in the United States where there's a candidate that says we're going to improve relations with Russia, it's all going to get better. Would that help? I think no, because really it's Europe that needs to lift the sanctions. Would Europe generally lift the sanctions? I think no. The answer is an absolute no. So even a change in the US policy would not necessarily trigger a change in the European policy. US was never a big buyer of Russian oil. So that's basically out of the picture in 2024-25 for sure. Then the second factor that I think is becoming increasingly important, we have had an absolutely insanely profitable couple of years over the 2022 and even 24 period. If you compare that to what 2015 or 16 or 17 felt like, it's a completely different universe. It's heaven. Now we're edging towards a period where the refinery margins are going to shrink quite massively. Now, if your refinery margins globally are shrinking, what is the key thing for your viability is the competitive edge. Now, why would, let's say, an Indian refiner want to continue buying Russian crude? Because it's literally $4 or $5 cheaper than anything else on the market. So India has an inherent competitive edge over everyone in basically the region. Maybe barring China, because China is the other buyer of discounted barrels globally. So effectively, everyone looks at global refinery margins, or Singapore margins, you know, Middle Eastern margins, or European margins, but never is the margin calculated on the basis of the Urals price. It's always calculated on the basis of Dubai prices. And if you just look at it from a perspective of the buyer, that's just locked in profits, perennial profits. Ultimately, for as long as the sanctions continue, it's an additional profit for the refinery. So I think it's mutual. The interest is mutual because for the Russians, it's a stable outlet that's not going to change. And for, say, an Indian or a Chinese refiner, that's the competitive edge that they have over the entire market.
Narendra, do you want to
Yeah.
weigh in at that point?
I think, you see, it's not permanent, or I think it's dynamic. We are entering into a completely new reality now. Reality is that since 1991, the collapse of the Soviet Union, we kind of witnessed and to some extent enjoyed a kind of one world energy order where the US played a very important role. That is gone now. That's out of the window. What we are witnessing now is the emergence or the construction of a new energy world order. And what does it mean? It means that, you know, Russia, China, Iran to some extent are going to they're building their own energy world order with its own economic fundamentals, including price. And India today is taking advantage of that. It's all economics, what India is doing, importing, you know, oil from. It's great economics. Ask Reliance Industries in India, they'll tell you. You know, they are in a very great situation. Of course, there's a political angle too. The reason India is buying oil from Russia and heavily is simply because India does not want Russia to grow too dependent on China. India wants Russia to maintain its strategic autonomy. That's a political agenda. So it's a both. It's not only economics, it's also political. And you can see that how these things are, are playing out. But that said, at the same time, my own sense is the world in terms of energy, especially oil, is now vertically split into two. One, you have the United States, part of Europe, and OECD countries, then you have China and Russia and so on. And then there are countries that are basically not neutral, but they just look at opportunities like, you know, Middle East, look at India, look at Indonesia, look at many countries in Africa and Latin America. They see just basically day to day. Okay, if I go with Russian, I get this advantage like India is doing, or should I go with the other bloc? So I think we are in a very, very different situation, very dynamic, politically very volatile. And at this stage, when we look at the horizon, we don't know how it's going to look like. Who wins in America would make a difference, but at the same time, I think we see the emergence of a new bloc. And this bloc, which is like where Russia, China are going to play an important role. Some people may want to call it BRICS bloc and whatever name, I don't think that's right. Right now, what we are witnessing in China and Russia, to some extent Iran, joining this, and this is a new bloc. And then we have the traditional bloc which already exists. How it's going to play out is very, very difficult to say at this stage.
Yeah. I mean, turning now to Kieran, I mean, you're the kind of master of versatility to some extent, being a trader of such global proportions. But, I mean, it's very hard for us to imagine now a world that would be different than it is today. But, of course, I mean, there is, if you read the newspapers, a lot of talk about, the Ukraine conflict moving to some sort of resolution. Obviously, 2025 is round the corner, but were there to be some kind of resolution between Ukraine and Russia, could you not see the oil market then returning to some sort of previous state?
No, I think I would largely agree with my fellow panelists here. I think you know, you said that the map was sort of redrawn, cobbled together. I don't think it was cobbled together, actually. Markets adapt very quickly to disruption. You know, the markets are mature now. The players within the market are mature, and I've seen, you know, COVID also was a great example of that. I think the damage is done between Russia and a lot of their European counterparts. I think relationships also get forged over time, and you know, China and India have stepped up to take those, particularly in the Russian crude. I think that those relationships get formed, and it's probably quite difficult to go back on that after. It doesn't really matter what happens with Ukraine in 2025.
Got you. Well, staying with you, Kieran, and just moving on to another question here about the rise of the Middle Eastern-owned oil trading firms, and how is that kind of, have they come to eat your lunch, or are you quite comfortable with the rise of this new demographic?
It's a good question. It does come up time and again. You know, obviously, competition is competition, and you can stand up here and make all the right noises. You know, would probably prefer there was less competition, but equally, you know, you have to. When we see the rise of Aramco Trading or AGT or Bapco Energies now, etc., like that, there will be that initial hit of competition for sure. But again, markets are mature. We all need trading partners. There's different ways in which, you know, instead of buying FOB from Bapco, as we have for many years, as they turn into a trading company, we supply them LNG, or you know, you become a conduit for their deliveries into Africa, or you know, we've invested in downstream. So very much, you still end up dealing with the same people. We've got, you know, other major trading houses that you would say are Vitol's main rivals. We actually trade a huge amount of volume with them on an annual basis. So yes, of course they're there to eat our lunch in a way, but again, we kind of adapt and find ways to make sure they remain trading partners.
Narendra, have you seen the rise of the Middle Eastern oil trading firms as a plus for India, for example?
No, plus is good for us and good for India, because look, the way India looks at the Middle East is more in terms of building interdependence and going for complete integration, economically and especially in the energy sector, and beyond that as well, of course, political at some stage later. And if you look at, for instance, India's push, which is getting huge traction, you know, from Western Europe and the United States and Japan and a number of other countries, there's for building a kind of economic corridor between India and the Middle East that goes from India, Middle East, right up to Europe, and is being heavily backed by the United States and a number of other G20 countries. So basically, if you look at the agenda of that economic corridor, is to basically go for complete integration, which means that, you know, the strength that the Middle Eastern countries, we call them West Asia, they have, like Saudi Arabia, United Arab Emirates, and others in the region, and what basically, you know, what we need, they can provide to us, and what they need, maybe we can provide to them, and do it in such a situation that is a win-win. So it requires, of course, you know, integration in terms of institutions, mechanisms, you know, protocols, trade protocols, tax protocols, and eventually kind of going for a situation where both India and the Middle East, the entire region, actually gets integrated in such a way that, you know, that they can build their future together. Of course, there's a political angle, if I might quickly mention that. That, of course, you know, India, the United States, and Europe somewhere are also looking at what China is doing in this part of the world in terms of BRI. So it's, some people say it's a kind of a response to BRI. That's not my view. I think if you look at the history of India and the Middle East, the history is very, very old. It's ancient. We have known the Middle East for thousands of years, and there's nothing new about us. So we know them very well, and they know us very well. In fact, 5% of the language, words that we use in our day-to-day language are Arabic words. So we know each other very well. Look at our preferences in terms of food and everything. So I think what history is going to repeat itself. We'll go for integration, and we'll kind of build an India and Middle East as a kind of very, very important economic, energy, and political power center for the world.
Yeah, and I thought it was very interesting what the earlier panel was saying about how the national companies perhaps had come to terms with the idea that trading wasn't necessarily speculation, but it was actually just gaining more value across the value chain. But I mean, just turning to you, Viktor, looking again at this trend of the rise of the kind of CIF players, if you like, in the Middle East, what's your perspective from the KPLER point of view?
Well, I think it was inevitable. It was inevitable to happen, but apart from the obvious fact that you need to lock in as much throughout the supply chain as you possibly could, there's also, I think, there's a human or a psychological factor which just cannot be underestimated. Because effectively, if you have your own homegrown pool of talent, which is not only good in refining, not only good in storage, not only good in midstream, but is also good in optimization and trading, the amount of information that's accumulated within the same company is much higher. So effectively, in 10 years, there would be no purpose and reason for me to be in the Middle East whatsoever. There would be no one to consult or no one to tell my analysis to, because everyone would be understanding that. And because there would be a lot of proprietary trading or third-party trading happening, they would even know more than I do. The only thing that I could tell is anecdotes from my past experience, and that's it. And that is effectively the key thing for human development. Ultimately, you have a young population that would be highly competent, and at some point there would be even more than the actual domestic market needs. So you would have an outflow of Middle Eastern oil talent going everywhere. Because effectively in Europe, for instance, you look across geological departments or engineering departments specifically focusing on oil and gas. They're half empty. There's no interest. People perceive it as a bad career. Here, it's exactly the opposite. And if you know that oil is not going to disappear in 10 years, who's going to fill those spots? I mean, the answer is pretty obvious to me.
Yeah. Great. Well, just before we jump to the next question, I think we'll throw another question up on the board for the audience to have a go at. And this is the second question. Vityol, CEO, I guess that's your boss, Kieran, said last month that peak gasoline demand in China was imminent. Are global oil market stakeholders still in denial about the arrival of peak crude oil demand in China? So are the stakeholders in denial about peak crude oil demand in China? A, agree, B, disagree. Use your buzzers, please. Okay, they are in denial. That's an interesting one. Well, I guess, Kieran, you can't be in denial because your CEO was the man that said it, but give me your thoughts on that.
I will point out he was speaking about gasoline. He didn't speak about crude. I think with regards crude, we've got to be careful here on calling for peak demand in China because it's very nuanced. I think as Jorge Montepec said earlier, the rise of EVs, the rise of LNG-fueled trucks, etc., like that, certainly have a huge impact on the gasoline market. And for that reason, yes, Russell pointed out that we probably see gasoline plateauing from here on in. I think there's still room for growth in the jet fuel market, you know, as again the middle classes continue to grow and new airports, etc., expansion of current airports in China. There's still a question mark over diesel. We'd probably see a little bit of growth there, maybe not so much. But with regards to peak crude as well, you know, I think where we're coming from, and a lot of analysts are coming from, is there's a plateau here on growth. It's not shrinking, right? And then we can't ignore the growth in the petchem sector. And there's some very modern refineries in China where crude to petchems is now the thing. And we see them bringing in joint venture partners from this region as well. into some of those refiners, and that growth in the petchem sector certainly points to steady demand for crude as well.
Yeah, so perhaps peak is the wrong word. In fact,
I would agree.
it's more plateau than peak. Yeah, yeah. Which actually brings with it a lot of consequences in terms of investment. For example, that if the plateau lasts for a long time, for example. Yeah. So we've just got a couple more minutes, I think, till we're going to close now. So just very quickly, I mean, maybe a couple of final thoughts from you, Viktor and Narendra, on this question of peak crude demand in China, or more broadly, globally.
Yeah, I guess I would start. I would very much agree with Kieran. I mean, China is a nuanced story. It's reaching a peak in what we call core products, diesel, gasoline. Petrochemicals and NGLs are going to increase. So effectively, we just need to focus on what specifically is growing. Will China disappoint in terms of sentiment? I think yes. Because, you know, it is a very uplifting feeling that for a decade you could grow perennially. I mean, basically there was always growth. Even in COVID years there was growth. Bam, bam, bam. Every single year you saw that demand was increasing. Now when the market is starting to realize that this is not happening, there's a sense of disappointment. Where has it gone? I think the market will increasingly start to look towards India. India will become the focus. People will start to look at consumption, real time, you know, how people are moving, how the airplanes are flying. That's going to be everyone's effectively favorite country to look at in the sense of what could grow, because you want the growth to happen. It's difficult to live in stagnation because it bores you. There's no excitement about stagnation because, you know, in a beautiful ballroom like this, all the spots or the places are taken. There's nothing for you if you want to join the market. Yeah. So I think China will gradually subside in terms of how much we talk about it. It's not going to subside in terms of actual demand, but the interest towards China will decrease, and India would become the new China of the 2020s, especially for the second half of this decade.
Narendra, final thoughts from you on that.
You see, this question of peak oil in China, I think, is premature. China is still a fossil fuel economy. You know, when you go to Shanghai, another big city in China, you see this huge population of EVs. So it creates that illusion that China has already moved on to the next. It is not. And then also it depends how you look at it. Look at the Chinese oil companies active overseas. Look at the equity oil, as they call it. They're investing billions. Look just what they're doing in Iran, for instance, just in your neighborhood. Look in Africa. So I think, you know, and they continue to actually invest more money in oil exploration production worldwide, securing oil. So, and moreover, if you look at their worldview, their interest in Asia, in Africa, Latin America, where oil continues to be a very, very important role as part of their foreign policy goals. So therefore, to ask this question, and you're looking only in terms of China, the geography, I think we will reach to the wrong conclusion. China is thinking of the world, and where oil is going to play a very, very important role. Oil is a very important part of the global energy diplomacy. So that's how we should look at it. So this question, whether, you know, peak oil in China is premature, to some extent irrelevant.